this channel, what what they'll try to do is people use the support and resistance. I'll show you. See, people think like this is support and resistance. Once it breaks this one, right? People get in go long here in this portion, but they'll get stopped out. People will go long, and then price will come back down. That is the reason you should always use the channel as well. And so I have this indicator. This block was created by this indicator, the structure block. This is very helpful for smart money concepts. This is the only indicator I've been using for market structure. So this will help you identify the market structure break and etc. See, for example, if you notice what happens, right? See, market has broke the structure. Once people will get into the trading and here, and then people think that market will go up from here, but it's done the fake out and it has come down. So once if you notice what's happening, see, we have higher highs in price action, and we have lower lows. And also why it is going up. This indicator here, market structure indicator. This is an order block which is created by this one. Because the order block, people won't look at the order block. People are relying on only on trend lines. See, for example, this is the order block. So market established this order block. See, exactly this, and then it went up. So you should be careful. Like for example, if you notice what happened here. See, after the divergence, prices come back to test this. $61.8 golden ratio. See, so exactly it has touched, and then it is trying to hit the order block, which was this one which I marked earlier. So it's trying to hit this one because this was the previous order before the sell off. So this is where price will get attracted. See, yeah. So this was the last order block which was created before this move. So price has come down, touched this, and it's trying to go up from here. Also, there is 61.8 golden ratio. So people always use this trade like this. For example, trend lines. They'll use this trend line and trying to sell off. They'll keep the stop loss just before this, and then stop loss will get hit. They'll come back again. What they will do? They'll trying to sell after break of structure here. They'll try to sell this here, and then they'll keep the stop loss just below it, and then people get stopped out, and then price will go up again. So this is what happens with the trend line traders. So you don't use the trend lines completely depend on the trend lines. You should use the concepts of order block and the smart money concept. See, for example, see, after tapping this order block, it's trying to come down. If you notice, even it has touched this order block as well. See, this was the order last candle before it has come down. So it has touched this order block and it has come down here. This is what happens. So people don't understand. They'll always trade like this. They'll put a trend line here on the high, and then they'll try to go long here and put stop loss just above it, and then price keeps hitting that stop loss and come down here. Then if you notice what happens, see, for example, this was the last candle. This was the last candle before the sell off. This was the order block. So price will get attracted here actually. So price will come down here tomorrow, and then it will go back up again. So this from the example, see if you notice what's happening like time frame. See, price has come down. The last order block was this one before the sell off. Price has come down and touched this order block. Let's touch this order block. Then this going up from now. So it has broke the trend line. So who are trading this trend line here, they will fail here. See, for example, they want to buy after breaking this trend line, keeping the stop loss, see that they'll get stopped out. They'll also keep the stop loss on previous high, they'll get stopped out. See, so this is what happens with the trend line traders. Don't use trend lines as don't completely depend on trend line. Use the Fibonacci golden ratios. See, for example, see the confluence here. See, for example, see the previous high. See the confluence of 786. See, it will come back down here, and it is touching the mitigating the order block, previous order block before it goes up. Also, it will go up from here, and also you can see exactly it's tapping Golden ratio 0.5, 0.618, and 786. Either one of this, it will tap and it will come back down. See, same thing happening here. If you notice this high and this low, so it is tapping the 0.5 level and then it's coming back down. Try to create this, keeping stop loss or hit. See, stop loss was hit and then it comes back down. If you take on stop losses, comes back down, so with the high low, it is complete move. So price tomorrow, I think there's a gap here. I think for tomorrow the price will do this tomorrow. Comes on, tap the soft block, take out the high, then comes back down again. Or it will choose the direction whether to go up or not. This channel, what what they will try to do is people use the support and resistance. I'll show you. See, people think like this is support and resistance. Once it breaks this one, right, people get in go long here in this portion, but they'll get stopped out. People will go long, and then price will come back down. That is the reason you should always use the channel as well. And Fibonacci, if you see this as well, see 786. This is the point where you wanted to buy 786. The great entry for the buy opportunity, keeping the stop loss here. Then yeah, once it breaks, it just retests this and then comes back down, and then again started this. So channels are very useful. Channels, and you can use Fibonacci's channels instead of trend line. Trend lines and the support and resistance traders will always get punished by the market makers as smart money concepts. So always make sure to use Fibonacci and the order blocks and the smart money concepts. Thank you for watching. Bye.